wonderful to be here. As mentioned, I would love to invite our panelists to the stage.
Hi, I'm David. I'm an investment director at Animoca Brands. So Animoca, we have been very successful in gaming in the last cycle, from Axie Infinity, Sandbox, Metaverse, Yuga Labs, Sport Apes. But we have been diversifying a lot since then. We have focused a lot on non-gaming as well. So we are also very strong in AI infrastructure, DeepIn and so on. And of course, we have been big supporter of mobile first ecosystems like Telegram and so on. I think those are where the users are, and I think users is very important for any Web3 ecosystems, because that drives attention, and attention is drives token price. So we're very happy to be here and share our thoughts with the amazing panel.
I'm David from RockawayX. RockawayX is a 3 billion Web3 investment firm. We have recently announced our 125 million VC fund 2, which will mostly be focused on Solana ecosystem, as well DeFi, AI, DeepIns, and consumer-focused applications. We are super excited to work with great founders in the Web3 space.
Hey, my name is Kirill Malev. I'm venture advisor. Top TOP is the open platform. We are investors in Wallet and all other your favorite apps inside mini apps/Ton ecosystem.
I'm Lionel, so I'm from the investment team in Spartan. Under investment team, we currently manage 3 funds. So 1 liquid long short hedge fund and 2 venture funds. We also have 2 other business arms in Spartan Group. So our advisory team, think of them as a crypto investment bank, as well as we have a venture studio arm. Yep.
Thanks, everyone. And very briefly, my name is Mona. I work for a German venture capital fund called Tokentus, and also now for Edge Capital, which is a DeFi hedge fund. Right. So, interesting topic, bull to bear. I don't want to, make it seem like we're in an absolute bear market yet, or at all, but we'll keep that as the premise for now. I would love to understand, and I'm happy for anyone to take these questions. It doesn't have to be in a row. Whoever feels like they really want to start, please go for it. How do you, in your fund, for your own decision making, how has that process changed from a very bullish sentiment, a very bullish market, to a more, let's say, cautious environment? Does your decision-making process change at all when you're evaluating startups?
From the beginning, we knew that we would be some kind of benchmark for external VCs to look at the ecosystem. So hence our decision-making process didn't change at all. So we are making the bets only when we are 100% sure, because we need to be mindful of our reputation, which we built so far. So I can say that we adjusted decision-making anyhow over the course of the last half a year.
Actually, on our side, it hasn't changed too much, right? Because I think that's what Kirill was mentioning. We invest for the long term, right? So we invest in projects that we have high conviction in. So we're not really, we're not a liquid fund, right? That we need to care about our entry points as much. Obviously, if you do public comms, sometimes on the public market, because of the entire drawdown, there may be opportunities on the public side that are more attractive at that point in time. So sometimes we use that into consideration and see whether there is an opportunity to do an OTC deal on the liquid side, as opposed to investing in the private markets if valuations in the private market have not come down as much, and the valuations are not as attractive. I guess there's that relative calm with the liquid market and OTC deals. But generally, we take a long-term view on this.
Yeah, so from our perspective, I don't think we have changed too much our investment process. Wherever we are in a bear market or a bull market, we're also usually we're always investing for the long term. And for VCs, basically, we need to deliver great returns, right? So we're also always looking for great founders in a big market that can build sustainable business. and can grow it regardless of the cycle. And I think that's very important. And also, I think we have quite noticed recently some funds also starting to focus on liquid side of things. If there are maybe less opportunities on the private side, there might be some investment strategies that are actually better on the public side of things. So I think that might be slight shift in the investment strategy that we have observed in some funds as well.
Yeah, for us actually, we don't see it as such a bear market. I would call it kangaroo markets because it's up and down, up and down. So yeah, I mean, Animoca has always been investing for the long term, and we always invest back our investment return back into Web3. So that's always been our strategy and philosophy. And I think in this kind of market, it's actually best time to build. So we have been, still very actively looking. Of course, we also, look at other opportunities as well. Either liquid or illiquid. But actually, there's still a lot of great projects out there. So still looking for long-term value.
And maybe, David, I'll throw it right back at you. In a kangaroo market, which I love, I will keep that, I think, for today. Would you say that, from your perspective, your VC, your investment team, are you guys more focused on profitability, runway, over kind of big picture vision? Does that change when the market is in a more of a flux state, or are you always looking for one or the other, either big picture vision, or is it more focused on profitability? Do you have thoughts on that?
Yeah, well, I guess it really depends on the types of projects because I think there's always, projects that aim to solve a very large long-term pain point of the industry that, is very difficult to tackle and needs people to solve. And I think that is more of a long-term, process, right? So that might not be able in the short term to generate so much cash flow and revenue, which is okay. But for the team, in that case, then they will need to have a longer runway. They may have to do the more traditional kind of raising to sustain their operations. So I guess there is still quite a lot of those projects, and I think we still support them. But I think more and more projects is also need to because they have been too focused on the what I call the token market fits rather than the product market fits. So they depend on launching a token to survive, right? Which doesn't work in this market.
This is brilliant, by the way. Token market fit. I like it.
Yeah. So yeah, exactly. So you have to survive even without token. So that's why large part of the projects in the market these days need to find ways to generate revenue.
Well, one nice gentleman told me, and I'm not sure if quote is his, but like, good project doesn't need a token, good product token doesn't need a project. So I'm somewhere in between. So like, if your tokenomics makes sense, of course you should exercise this wonderful opportunity blockchain industry bestows upon entrepreneurs to launch the token and to integrate it into the product and the community connections they're building with it. On the other hand, I can't pretend that I'm not noticing lots of projects launching token just because they can. Well, it works out for some of them. I just really like when people are sincere and they are like straight in that in regard that they are not trying to disguise and to pretend that they're doing something that they actually don't want to do. And I think, by the way, like summing up, like I think the market gives like the ultimate vote there. So once your token is out, market will decide if it was worthy or not. So you can't be fooling market and community for long. So because like economics is a science, and it may not be as exact and precise as math or physics is, but nevertheless it's a science, so you can't fool economics for long.
From my perspective, I think it's always like the project first needs to survive, right? So that's the main thing. Unless it has enough runway, it cannot disrupt anything what it's trying to achieve. So first of all, it needs to either like fundraise to have the capital to do it, or the project needs to focus on generating revenue to be able to actually bring the disruption and bring their vision to space to reality. So like we work with projects deeply and make sure that they can actually survive to bring their vision to reality.
Lionel, what's your thoughts on the kangaroo market profitability versus big picture vision?
Yeah, I actually don't think it's about the market per se, right? It's not that it's because maybe we are in a low, like not as promising market, in which like sentiment is a bit lower, that there's more focus on profitability. I think in general it's like the entire crypto market maturing and realizing that, yeah, and I think what a lot of the panelists already highlighted, it's really about the sustainability of a project in the long run, right? And yeah, I think, and that's why the focus has gone to like more sustainable revenues. But I would say even on the VC side, it's really about finding novel ideas, right? So it's not just pure sustainable revenues that are, we are still looking for the like opportunities that give us like the asymmetric growth, right? Not a consistent growth in a very slow way, right? I think a lot of VCs still want to be on the cutting edge of innovation and finding real novel projects.
And maybe Lionel, on that note, what do you think? Which sectors or parts of the Web3 industry have really taken a hit with a maybe less promising market, and which are actually flourishing? Do you have an opinion, or do you see that amongst your portfolio?
So maybe not in relation to our portfolio, but I think with the recent drawdown, you saw certain aspects in which there are more speculative capital being like experiencing the heavier drawdowns. Um, like like it or not, like the AI agent sector, yeah, drew down quite a fair bit, right? And I think a lot of it went down to like the mode of these agents. Do really these agents need a token in their business model? What is the role of a token there? Yeah, so these are just ideas that, I mean, in the peak of a bull market, you probably can get away with it because there's a lot of speculation there, right? But when it really comes down to, do people believe in the long-term future of it? Because when the bear market comes, these tokens will draw down if people don't see a long-term future, right? And then it's, yeah. So that sector got hit quite a bit. The sector that was more resilient, and I think you see quite a lot of VC funding these days, is the stablecoin side, right? So like with the entire market pulling back, you see stablecoins on chain hitting all-time highs, right? There haven't been like significant dips, and like it's basically a consistent uptrend. Stablecoin payments are used like worldwide, especially in a lot of developing countries in which potentially their currency is being devalued, and yeah, they rather hold their assets in USD denominated stables. Yeah, so that area actually, like, yeah, you saw financing in like Plasma, which is focused on like USDT transfers. You see Codex, which yeah. So stablecoin related chains like starting to like gain a bit of traction.
David, what do you think? One of the Davids.
Well, like crypto is a narrative-driven market, right? So every narrative basically hits a peak and then decreases. We've seen that with like DeFi in 2021. We saw that with NFTs. We saw that with meme coins, with Bitcoin L2s, and I can go on and on. So I think like most of the narratives behave in this way. The question is if there are any projects that build for the long run and build actually a sustainable business in this. However, that said, there are like some narratives that actually, have maybe like a longer term like cycle, or maybe less pronounced peaks and bottoms. One of them, as was already mentioned here, is stablecoins, which I also believe have a great product market fit, and we at RockawayX are focusing on that quite a lot. As well as yield bearing like projects that generate yield for consumers and investors. I would also mention that AI actually is maybe a narrative that actually gets the fuel for growth from Web 2, where people see crypto as a way how they could get exposure into AI, and they take it as a more or less a proxy to invest and kind of make some money out of it. And I think that it's basically fueled by all the big players in Web 2 always, or almost every other week, they're coming up and announcing any great models. So I think that's something to note, where like AI is actually one of them.
Yeah, I think totally agree with all the speakers. In fact, we at Animoca, we are doing a stable coin for Hong Kong dollar with the Standard Chartered Bank in Hong Kong as well. So definitely one thing that is having a long term mass adoption. I think for this cycle, it's all about institutional adoption and then going towards mass adoption, right? Because we have the ETF incoming. I think a lot of Fortune 500 companies, they are buying Bitcoin on their balance sheets. And of course, the US government is, driving all the different countries to adopt more Web3 and crypto. So I think we are heading towards that mass adoption cycle. And I think, to be a bit contrarian, actually, I think gaming will come back this cycle. Two reasons. One is, Switch 2, it's come out, and not just because it is one of the best-selling console, they increased the price of each Switch game from $50 to $70, which will break the bare price ceiling of the games before. So this will drive more investment into games, more attention back into games, and this will naturally bring up the Web3 games valuation. Secondly, GTA 6, who is fan of GTA 6? Yeah, so I think a lot of gamers, they love to get the game, and that game is incorporating AI into gaming big way. So I think AI and gaming together is another vertical that we are quite bullish into this cycle and next cycle as well. So because it creates a lot of more new experience, it can increase the retention rate and of course drive a lot more sustainability of each title as well. So that's some of the things that we like.
Kirill, any other thoughts on this?
Well, I think I can relate to what colleagues were saying, but here are my 5 cents. Like, crypto is, yes, narrative driven, but that's the internal view. So from inside the crypto sphere, there are always narratives, they interchange with each other. But from macro perspective, I'd rather say that crypto is risk-seeking behavior driven. So like when there is a risk appetite on the market, when like VIX is low, so like people flow into assets which potentially more generating more yield. And we have to be mindful of the general like non-crypto fiat industry, because yes, the shift is happening. No, shift is happening slower than I'd rather have it. And I have another unpopular opinion, or popular depending on the circles you talk to. So like probably mass adoption might have happened already, and we as an industry are not mature enough to admit it, that this is practically the preached land. We are here already, because like my mom heard about the hamster, like taxi drivers, they might have tapped now, not coins. So I think there, at least in my decision-making process, this is one of the hats I'm wearing when I'm making decisions. So like, what if mass adoption have happened already? What if we are already in the market when everyone who wanted to own Bitcoin or your favorite coin, they already purchased it. So, and a lot new perspective on market opens when you wear that hat.
Thank you. I like the, different opinions and bringing up some things that are actually really part of your thesis and how you guys think, rather than maybe just always saying exactly what, everybody else is saying on Twitter. So I appreciate that. And I would love to actually get the same honest, raw feedback on the topic of today, which is apps and mini apps. How do you see that landscape evolving? Do you see a difference between previous cycles to this cycle? How do you guys think about it, invest in it? Can you share anything on that particular topic, on dApps and mini apps?
Mini apps as a term is already there in the active lexicon of crypto professionals and like general audience. So I think in our ecosystem, we contributed a lot to that, and I'm happy. The thing is, like I can relate to the previous speaker who was on stage before us. So like, yes, there is an audience in mini apps. They have some expectations, and we have coined the term and built initial momentum. But now it's up for builders of the new generation to come up and to show and to invent probably a new playbook for working with this audience, for working in this landscape. And from the perspective of investing, it's something which I or my colleagues haven't thought about or can deliver ourselves. So it matters most what we can't think through or we can't execute because we're too busy. Because this is now reminds market where you want to experiment a lot, because there is no, like year ago, there was an altcoin, so we saw top tier narrative emerge out of it. So it was clear that the copycats would make some motion there. But right now there is no dominant strategy there to win apart from build, like in general, maturing market. Just keep experimenting and building. And if your pitch is interesting enough, you will definitely find VCs who would be able to back this up.
Yeah, so I think we saw great mini apps actually gaining a lot of traction over the past year. It was mostly I would say in the gaming or mini games sector. But I think like now the shift should go into like a more like maybe finance or DeFi mini apps, where the mini apps have kind of advantage in terms of like maybe better UX. Users don't have to necessarily like download big wallets or use the desktop browser to connect to some like random like dApp, right? Everything one could use in the phone. So I think like that aspect has a clear advantage.
Yeah, would like to echo that. Because, I mean, in the entire mini app space, like, there's a lot of different verticals, right? Like, gaming being the first vertical that took off. I think, like, for future games that are building mini apps, I think, like, probably, like, need to find a more sustainable way of building your game, right? Like, understanding who your users are, like your lifetime value of each user, your cost per installs, right? Like your typical mobile app. Like this kind of analysis needs to be done, testing needs to be done before like marketing, right? And yeah, that's required to drive a sustainable like consumer app in general. Yeah, DeFi definitely has a use case, right? Because it's like paired with like the increase in stable coins, increase in people seeking yield. Right now, there's a lot of people like trying to tap into the volatility of the crypto markets to get a higher yield in a market neutral way. So I think there's a lot of opportunities in that side of things also.
Yeah, I think mini apps, has been driving a lot of. Actually, I think can actually be one of the ways that help to onboard a lot more users from the Web2 side, because a lot of ecosystems, like Telegram, they already have such a large user base, right? And as a super app, the Web3 mini apps can be the portal to onboard them. We see them. We witnessed it with the NotCon, Cadison, and so on. And I do start to see some kind of more sophisticated, games or apps that start to happen. Some integrating AI, some integrating vibe coding into the mini apps as well. So I think that's interesting. Of course, I think it's still relatively early stage, but I'm still quite bullish because of the large sticky user base that is using the ecosystem every day.
Right, we'll get to the last question of our panel today, which is maybe for all the founders in the audience, what advice would you give them to raise in such a kangaroo market climate? What are the things that you look for? Don't have to list loads of things, maybe just one or two clear points for the audience to remember. And if you have any other things you wanted to say today that you didn't get a chance to say because I didn't ask the right questions, I am welcoming you to also share that knowledge with us with this last kind of question set.
So what basically are we looking for, right, in the in founders and projects? Well, I think it comes down, based on the stage of the project, right? Like the earlier the project is fundraising, the more it is about the founder and the initial traction and like his vision that he's looking for to deliver. And the later the project, or the later stage the project is, it comes down more towards the numbers, right? Like whether you can actually generate the revenue, what are the numbers, and what is the traction. So I think that really depends on the stage. We at RockawayX, we're mostly focusing on seed stage investments. So we prefer to lead the seed rounds. So like 5 million seed round, for example, we put 2 million check there, and we would be looking for at that point like mostly the product market fit and early stage traction together with how quality the team is behind the project.
Lionel, maybe?
Yep. Yeah. So I would also say really look at, like, for the early stage projects, like look at the team's background, whether they have expertise in the particular area that they are actually building in, why you are best suited to build a particular kind of project. I would say, like, hone in on your experience in the area, what kind of partnerships you can draw on to convince like people that you are the team to bet on, right? Because there will be a lot of like competition out there, right? And I think for founders who have raised, use your VCs as a sounding board, right? Because like sometimes a product may not gain as much traction, and it's really okay to pivot, right? That's one of the hallmarks of a good founder, being nimble, knowing when to push on with a particular idea, and when you understand like maybe this is not the right direction I should head towards, and maybe I should move in a different direction. And I think VCs have, I mean, we don't know the specifics as well as compared to founders in a particular industry, in a particular vertical, but we know the broad trends that are happening across the entire landscape, right? So we see a large range of projects. We know who is building in what areas, who your competitors are in particular areas. So use your VCs as a sounding board to see whether this is an idea that has potential and where it could potentially fit in.
I guess for us, yeah, definitely, in this type of market, as I mentioned before, you have to, find ways to kind of extend the runway, even generate cash flow before relying on the token launch. I think this is one kind of imminent point that you have to consider rather than just relying on launching a token, because everything, the valuation has been compressed. So I think that's one kind of important point. The second, I think, as some of the speakers already mentioned, I think, the founding team is, I think, one of the more important things that we focus on as well. you have to hustle, and pivot at the right time because the market keep changing even faster, right? With each cycle. So, having the maybe, coming as the first product in a particular niche might, make sense. Or, if you want to go into a competitive space, what's your kind of mode and differentiator? I think it's also very important. Um, yeah, so I think it's actually a great time to build, because people want something that they can draw the attention to. So I think it's a great time to keep building.
Thank you. Yeah, I can second that. Great time to be building, because if you are building something worthy, there are not that many new projects coming up which are worthy in this kind of microeconomic situation in crypto. But summing up, like first, I think don't be looking for investors as money or smart money. You should be looking for partners, because this is what investor essentially is. They are your partner when it comes to owning share of success or failure of your endeavor. And second, it's to be aiming at the disruption or aiming at building successful yield dividends generating business, because like something in between, it's hard to differentiate in the current market. And good marker of disruption is new term, a new profession coming in, just as we saw during the revolution when the worker class emerged as opposed to like serfs and farmers. We saw Uber drivers emerge when the Uber disrupted the market. So like either aim for disruption or stable flow of the dividends. And third, I think we are looking at founders who can be described by high, he, ha, high integrity, high agency, high intelligence. So be nimble, just as Lionel said, be moving forward, and be smart.
Thank you very much. I think we learned quite a bit. The very quick summary, we learned we're in a kangaroo market, which I think is a very accurate depiction. We also learned that processes don't really change for VCs. They really follow a similar process. So maybe a bull or a bear market is not necessarily going to have a lot of impact on the decision-making process itself. We also learned that profitability and having real traction, real business model, not just purely based on speculation and hype, is something very, very important. So think about that, because you have to be sustainable without just having a token launch to keep you afloat for a little while. We've learned that mini apps are emerging, that there's a lot of opportunity there. We hear that some industries, such as stablecoins, seem to have a lot of adoption possibilities due to also institutional interest. Gaming may be coming back as a narrative as well. So I think there's a few things we can look out for and see how all of these things develop. And of course, team is important, right? As well as really building something for the long term. And I know we had many, many other phenomenal points, but you're probably annoyed now by listening to my voice kind of summarizing, as these did very, very eloquently already answer all these questions. So thank you, everybody, for this wonderful panel. And thank you, Epic Web3, for having us.
Hello, everyone. My name is Artur Kranz. Thank you. First of all, thank you for your time and this groundbreaking speakers and themes that you are discussing. Very appreciated for first of all. My question is, what is the first criteria for you guys to investment to any project? Because you know, a lot of startups coming with great idea and maybe great team and technical behind. You know, they have MVP and they have a great vision. They have a great work already done, but they don't have any traction yet. And I saw in my experience, a lot of team create a lot of good projects, but they don't have any traction now or yet. And all VCs looking for them and telling, hey, you okay, this is startup is good, but you don't have traction, we don't interested in you. Is it okay for all of VCs? In my opinion, I thinking that all VCs only looking for traction. Is it bad vision, or maybe really some VCs looking for great idea first and great team first, not for only traction? Thank you.
Traction is actually like one of the most important things, because it shows that the team can actually execute regardless of the stage of the project, right? Like many people have ideas and ideas are like coming and popping up everywhere. And everyone has great ideas, but then it comes down and boils down to execution, right? And the initial traction or signs of traction is actually important because it shows that the founder can execute well.
So what would you advise for pre-seed teams? Like what pathway shall they take before they come and pitch to a company like yours or to a VC that is already looking for traction? Because here in this room, we have lots of teams, with co-founders who are in their 20s, college graduates, they're just touching the industry and they're aspiring entrepreneurs and they have great ideas. Maybe they have great sense of market, but they maybe don't know how to approach this and what is, the best way to be successful.
From my perspective, it's also a lot about like understanding the problem very well, right? We talk to a lot of founders, and if we dig deeper and ask them like some like deep questions about the problem, we realize that there's actually like not much understanding of the problem. And sometimes like some founders also do not like validate that the problem actually exists, right? So I think what is always helpful is understanding and seeing that the founder or the founding team has actually executed in terms of like validating that there's a big enough problem to be solved.
My couple of cents just to jump in, and founders need to understand problem better than we see. So if you don't, as a founder, understand the problem better and you have nothing to say and nothing to teach me, and I have learned nothing after the meeting, nothing new, then probably like I can just hire a team and just go on and ship a better product, because I don't need to raise, I have money.
Hey guys, my name is Eugene. I'm a co-founder of Meme Hustle, meme app game in Telegram. Regarding the traction question, so there are two types of traction. So we have like product traction and we have social media traction. So how does much social media traction is important for you in terms of making decisions, or like product traction is kind of more important? Thank you.
Yeah, I think that's a very, very crude metric. So I think a lot of VCs these days go further than that in understanding the traction. So I would say product traction is a lot more important. And especially product traction, I mean, even in the testnet phase, right? Like product traction, like people will tend to view testnet traction with a pinch of salt also, right? It really comes when people are actually spending money in the app. There's actually revenues being generated that traction is taken a lot more seriously. Yeah, so I would say, I mean, product traction definitely above social media traction, because what we are seeing in some projects, not all projects, is sometimes these numbers can be manipulated in a sense also, right? And I think the VCs also know that. So yeah, that's what we're cautious of.
Let's say you found a project that you really liked, but they weren't going to be offering you a TGE. They're going to be using a stable coin. How would you approach it? And would you find interest in it if they weren't able to offer you a SAF?
Well, I would say the form factor of the investment is it's dependent on negotiations, right? So like usually I would say like the common structure right now is equity with token warrant. I would say that's the most common form of investment. If the founder is looking for a different structure, then I think it is usually up to negotiations and up to discussion what that could be and why it is not like the most standard form.
Yeah, maybe just to add on that point, right? So it's I think a lot of VCs are not fixated on a specific form. It's really like what makes sense for the business, right? You don't want a token for a equity only business if the token doesn't really perform any role. But what you have to keep in mind is that ultimately for a lot of VCs, we have like LPs, like our investors and we need to generate a profit for them, right? So part of it is looking at how we exit the investment also, because come the end of the fund life, we have to exit the investment. So what would the exit look like? If it's not a token exit, is it equity exit? If it's an equity exit, how are we exiting? Secondary market, IPO? What's your plan there, right? So a lot of this. Yeah.
Hello, everyone. My name is Frank, and I'm building a e-commerce mini app on Telegram. So our team think the crypto digital world need some real need to connect to the real world stuff. So that's why we made this product in 100 days. We already attract 1,000 users. Moreover, we make over 10K US dollar in a month. So we did some experiment which we think this kind of mini app which link this virtual world to the real world is really interesting. And we already saw some file on that. I know there are a lot of virtual stuff going on crypto, right? So we are building some project which link the virtual, like we find we build some e-commerce on Telegram. We enable people to buy real stuff using USDT or your coins. So what do you guys think on that one, to link crypto to the real world?
So what you're building is a marketplace for basically real world products, right? And you're offering a channel for people to use stable coins to pay the product. Yeah, so I guess broadly thinking, like, where do you see, like, the way I see it is you guys fall probably in the payments industry, right? And a lot of, there are also products out there, like right now, MetaMask has their own card, EtherFi launched their own card, right? So if you can use a credit card to pay via and basically transact on any site, right? That also essentially solves some of the problems that people are facing when off-ramping and wanting to spend their crypto assets, right? So I guess like that's the direction I'm thinking towards. Like, what is the pain point you guys are solving for? And yeah, that's how I'm looking at it.
I'm the founder of World KYC, Decentralized Digital ID. One question. I've heard about a lot of the mini apps and the value. I don't see, any investment in truly decentralized application and dApps. And is that because, I've got the answer, but that's for me. For you, why do you see an opportunity to invest in true decentralized? From a custody standpoint, from a control standpoint. Top dApps, in my mind, the D stand for decentralized. Are you investing in decentralized, and do you see that?
Like, decentralization is spectrum, right? And I think the past has shown us that like pure form on decentralization is like super hard to achieve. It's not like projects cannot achieve it right from the start. That's impossible. And on top of that, like most people don't necessarily care about decentralization, right? Like the users, the wide audience, like the billions of users out there that are waiting to be onboarded to crypto, it's they're not necessarily 100% convinced about decentralization. They care about like user experience, user interface, how easy it is to use the application. So I would say like decentralization is important, but it is not everything.
Decentralizing too early may actually be bad for a project, right? Because as what you have noticed with a lot of governance issues, governance, it's very hard to get people interested in governance, right? And you have your everyday consumer that knows very little about the product making a decision for the product. Is that a good thing in the long run? At the early stage, probably not, right? Because enterprise needs, a project needs to move fast, right? Make decisions more quickly rather than getting caught up with the entire thing. So I think in the future, like, yeah, definitely decentralization. I think there are merits to it, but in the early phase when something is getting product market fit, I think it might actually slow down the growth of a project. Yeah.
Okay, I think that's it. Thank you very much for this panel.